One fund, on point for today, the expert to talk about it. Welcome to the ETF of the Week. Yes, this is the ETF of the Week where we examine trending, new, newsworthy, unique, and intriguing exchange-traded funds with Todd Rosenbluth, the head of research at VettaFi. And if you go to VettaFi.com, you're going to find all the tools and research you need to make yourself a savvier, smarter investor in ETFs. Todd Rosenbluth, it's great to chat with you again.
It's great to be back, Chuck.
Your ETF of the week is
the abrdn Bloomberg All Commodity K-1 Free ETF, BCI.
BCI, the abrdn Bloomberg All Commodity Strategy K-1 Free ETF. It's a mouthful, but I think the most important word in there that explains why it's ETF of the week is going to be commodities. So why this fund in this structure now?
You're right. There's a lot of words here. We'll try to break down as many of them as appropriate, but commodities is the area of focus. We saw last week that consumers are more concerned about inflation than I think on record. The consumer sentiment, inflation expectations spiked because of the fears of tariff. So we have not seen inflation spike yet, but consumers are expecting it. And thus we want to make sure that consumers or ETF consumers are making sure they have exposure to commodities within their portfolio. Commodities like gold and energy and agricultural products are less sensitive. You can actually benefit from what's going on in the macroeconomic environment through a commodity slice within your portfolio. And this abrdn product, which is index-based, relatively cheap, to me is like the S&P 500 for commodities. It's well diversified, it's well structured, it's done in a smart way. abrdn is a leader in the commodity space. It has a lot of positive characteristics.
It does. One is K-1 free. That's about taxes, but explain why K-1 free is legitimately important to an investor who's getting commodities.
Yeah, so if you're investing in commodities, you're typically investing in or an ETF that uses futures contracts. There's different level of tax implications, and it just becomes harder. You get taxed for things you didn't fully appreciate, and it's different than every other ETF. So we've seen a number of ETFs that are K-1 free. It means your tax status or tax situation is like every other ETF you'd have within your portfolio. So it's just simple. You pay taxes when you sell, and if you make gains on it, as opposed to taxes throughout the year based on what's going on with the futures contracts.
As for commodities themselves, there are tons of commodity funds, and you can make it that like I'll buy corn or I'll buy oil or I'll do something direct. Why broad-based versus targeted in an environment where it seems like, there are a few industries you might want to target?
So we've seen gold be a stronger performer this year, and individualized gold ETFs, spot gold, let alone futures-based gold ETFs. I think there's one or two that are out there. Those are outperforming what we've seen within agriculture or we've seen in the energy space, but that won't always be the case. So we're big believers in diversification. This ETF, BCI, has roughly a third in energy, roughly a third in agriculture, and roughly a third within metals, whether that's precious metals like gold or industrial metals. So you're getting that risk and reward spread around the same way that many people believe technology is going to be a leader within the markets, but they own the S&P 500. Technology is the largest of the weighting, but you get that diversification in healthcare or consumer staples or financials to have some value-oriented stocks within your portfolio. We think BCI gives you that core, reasonably priced building block product to have within your asset allocation strategy.
Of late, Todd, the ETFs of the week have all been actively managed ETFs. They have all been, let's get into a space and not do it with indexing. This is an index-based strategy. So why here do you want the index, or is it you want the investment and right now you like the index, but we could do this again at some point, and you'd say, now in commodities, I want active.
Well, so if you remember, you probably do, and the audience probably does, that about a month or so ago, a little over a month ago, we talked about an active version of commodities. I want to give investors the variety of products to consider. Is this better than active? Well, it depends upon which active fund we're talking about. The index is going to be the average, and sometimes the average is going to be representative of the market. Sometimes that's a good thing. Sometimes a fund is going to be manager is going to be quite good at seeing what's going to happen next. Low-cost index-based ETFs still remain the dominant part of the ETF marketplace, even though active ETFs have been gaining market share. If you want to have it simple and have a strategic position and not have to worry about whether the manager is doing well or whether the manager leaves, this index-based ETF is a great way of getting core commodity diversified exposure.
And is it sufficient to be all of your commodity exposure? Or if you're building a portfolio, would you at some point say, I want the index and the active?
So you certainly could have the combination of an active and a passive-based approach. And I'm trying to remember which fund. I think we talked about Neuberger Berman, might have been the firm that we talked about it that had an active commodity strategy that we talked about. You also could use this BCI, this abrdn ETF, as the core and then overweight exposure towards one of those areas, whether that's precious metals and gold in particular, or agriculture, or energy, the same way that people are doing that within the equity or the fixed income space. You have the S&P 500 or you have the Bloomberg Barclays Ag as your core, and then you augment it with an active ETF or a more targeted product. But BCI is a great starting point for someone who has no commodity exposure within their portfolio.
And for someone who has no commodity exposure and is considering BCI as a possibility, how much of a portfolio you're willing to let commodities be? Because that is a distinct, acquired taste, and it fits into the alternative side of things, but it's not usually something somebody's go, yeah, let's just make that my entirety of alternatives.
Correct. So we've seen, and I'll go to the default of people have a 60-40 equity fixed income portfolio or a 70-30 equity fixed income. We've increasingly seen advisors, investors have roughly 5 to 10% that is something that's not equity or fixed income. And that can be commodities. That can certainly be Bitcoin. I think we've talked about Bitcoin as an alternative. There's other ways. I believe we talked about a hedge fund-like strategy a few weeks ago. This is all going to make up or potentially make up that 10% slice of your portfolio. So equities and fixed income should be a larger weighting, but this ETF, BCI, and commodities in general offers diversification. Commodities tend to zag when the equity and fixed income markets zig. And so you want to get that alternative approach to a portfolio to balance things out.
It's BCI, the abrdn Bloomberg All Commodities Strategy K-1 free ETF. The ETF of the week from Todd Rosenbluth at VettaFi. Todd, great stuff. See you again next week.
I'll see you next week, Chuck.
The ETF of the week is a joint production of VettaFi and Moneylife with Chuck Jaffe. And I am Chuck Jaffe. I'd love it if you check out my hour-long weekday podcast on your favorite podcast app by going to MoneyLifeShow.com. Now, if you want to get more information on your favorite or maybe soon-to-be favorite ETFs, go to VettaFi.com, where they've got all the tools you need to make yourself a savvier, smarter investor. They're on X at Vetta_Fi. And Todd Rosenbluth, their head of research, my guest here on The Navigator, he's on X as well. He's at Todd Rosenbluth. The ETF of the week is here for you every Thursday. Please follow along so you make sure you don't miss anything. And we'll be back with another great ETF to discuss next week. Until then, happy investing, everybody.